Hello traders, welcome to your daily market update for Monday the 30th of March 2015. It is a short week this week with Fridays being Good Friday leading us into the Easter weekend, but we will have a non-farm payroll result. So I believe the market will be quiet in the European session, but once again we'll get a little bit of movement due to the non-farm payroll. The weekend just gone, we did have changes in daylight savings for the UK and Europe, so keep an eye out for that. Adjust your trading calendars and your trading time so you don't miss the European session. And we'll just do a quick recap on what happened on Friday to bring us up to speed. The US dollar was slightly stronger against all major pairs except for the Japanese yen, and I believe that's due to the bond prices continuing to fall over there. But we did have a steady GDP. The market was initially concerned with the result as it wasn't outstanding, but when you look at the underlying numbers, it was quite stable, so there's nothing to really be excited about there or worried. But we did have Janet Yellen come out and mention that she does see rate rises in 2015, and I believe that that was the overall support for the US dollar index on Friday, because she's confirming what the market is anticipating and hoping for, and that can only be a good thing for the US dollar. We did have the University of Michigan upgrade their consumer sentiment, and that was another positive for the US dollar. The hardest hit were the Australian dollar and the Canadian dollars. These commodity currencies were hit due to the falling commodity prices. We had oil fall 6%, a very big move to the downside, and we've still got iron ore falling in Australia, and that's definitely going to continue to hurt the Australian dollar. We did have elections for New South Wales, Australia's largest state, and that happened on the weekend, and you'll see that there has been a gap in the Australian dollar lower, but I believe that gap should close throughout today. The European and the pound were both quite range-bound on Friday. The euro was flat, but we did have a significant improvement in German import prices, and that should have actually supported the euro, but it didn't. And I believe this is due to the net shorts we have in the market. We have extreme levels of net shorts. So if everybody's already short, there isn't anybody else to continue to push it lower. So I believe that we're at an interesting point here for the euro. And we'll have to wait and see. But for whatever we are behind, or below I should say, $1.10, we're still in bearish territory. But for now, it looks like the euro want to drift lower. The Great British Pound is very much in a range-bound motion, and that's very evident on the charts, which I'll show you in a minute. Having a look at the calendar today, there isn't a lot of major data coming out in the European session. We did have consumer credit here. We do have consumer confidence for the euro, and we'll move back into the consumer price index. So we've got some CPI for Germany, which the market will be focused on. They will add mild price reactions, but nothing too major in my opinion, so it could be quite subdued trading session. Although the overall theme, if we get all positive or negative data, well then we could get some moves there. So I believe that the chances are that we'll get a surprise to the upside for the European data due to all the quantitative easing, and that could add a little bit of support to the euro. Now moving into the US session, we do have some data coming out the market is looking for. We are looking for some personal income and the personal consumption. So that will affect the US dollar as well as, of course, the home sales. That has been quite weak, and we'll have to wait and see what happens there. Moving into Tuesday morning, we do have a bit of Australian data. Now, we are going to be looking at this, and it will impact the Australian dollar moving forward. And should we see some improvements there or weakness, that will affect the Australian dollar, so keep an eye out for that, and we'll have to have a look at the charts closer to that time to see if there's any trading opportunities. But if there is, it will be short-lived. There's no major data. The ANZ business confidence is what everybody's sort of focusing on, and unless it's drastically better or drastically weak, I don't believe it's going to have a huge impact on the long-term price action for the New Zealand. All right, so let's get into some charts. We'll have a look at the dollar index here. As you can see, the trend still follows. We've bounced off 96. It's going to be very interesting to see if the momentum can get underway again for the US dollar and we get above the psychological level of 100. But for now, we have tested this. We do have ourselves a really nice spinning top candle formation, and we will be looking for a further extension to the high side, but it's going to remain to be seen to see if we can take out the previous highs here. The trend has been going for a long time, and we will have to wait and see what rolls out. Let me get rid of the charts here, and we'll go to the New Zealand. So we have had some falls of recent in the New Zealand dollar versus the US. However, we did take out these previous highs here, which were significant. If I move this trend, this support and resistance, that was a significant resistance level. We have broken that out. We do have higher highs now. We do have a double bottom here. This is a long-term downtrend that I have been watching, and now we're getting to what I would call a point of convergence. It's an interesting place where the market is testing the back of it, and we're also coming to a whole round number of 75 cents. So I believe that in this area here, we could see some potential support, and the market could bounce off it. So it's going to be quite interesting to see, which is just here, the 75 cent. And it's interesting to see what the market will do from here. And being a point of convergence, I will wait for the market to give me a clear indication of where it wants to go before I jump in. But a bounce is definitely possible should we get some solid news tomorrow on the ANZ index. So the Australian dollar is another similar story. I'll zoom in here because that won't be clear for you. We've got a big long-term downtrend. We have slightly taken out this previous high here. It nudged above it just like the New Zealand. However, we have come off a little bit more than we have on the New Zealand, and we've had a gap here today, and I believe that gap will get filled, but for now we are under pressure due to falling commodity prices. The market is coming down to test the 77 cent range through here, which has historically become support. A few times we have dabbled below it, but it's been drawn up back above. So I'll have to wait and see here. If we do get support testing the back of it, like we were mentioning off the New Zealand, they are correlating pairs and they will typically move in the same direction together, and we get a bounce, we could possibly see ourselves have a head and shoulders pattern here. It's going to be purely subject to commodity prices and the US dollar moving forward, and we'll have to wait and see. We could actually continue to be range bound as well, as there isn't a lot of information about the Australian economy and the Australian interest rates until we get into next month. The euro, on the other hand, if I zoom in here for you, you'll see that we basically went nowhere on Friday, and we've got an indecision. Now, an indecision candle is just that. The market isn't sure where to go, and it could actually be range bound. And we're coming into this downtrend and an uptrend, and we did see a little break above it, but it stalled here once again and moved back. We're at a point of convergence right here at the intersection of these two trend lines, and the market needs to decide which way it wants to go. Guessing which way it wants to go isn't the best route, but for me, if we get a break below $1.08, that's a good indication that the market does want to continue to send the euro lower, and there'll be some trading opportunities there, something I'll be looking out for. The Great British Pound, as I said, is in a range bound, and it's in a much clearer range bound than the euro, but still, once again, we have a symmetrical triangle, and the market's just getting tighter and tighter and closer to this apex or the point here of the triangle, and at some stage it's going to have to break out. If I go to a 4-hourly chart, it's much clearer. I've marked in red the highs and the lows of the major support and resistance, and we're going to really need a solid breakout of these before we can actually pick a direction. Until then, it is range bound, so scalping opportunities is about all you're going to get. But for now, it looks like it wants to come down and test some lower levels. It is subject to the dollar index and some data that we've got coming out this week. The CAD, on the other hand, is very decisive in where it wants to go due to oil prices predominantly. We do have support here off $1.24, and it's bounced off here many times. It really wants to hold up for us, and it happened once again, and on Friday it bounced with oil prices falling heavily. I think this will continue, but once again, keep an eye on oil and keep an eye on the US dollar index, but the story for oil is always going to be more prominent, and it's going to actually control the trade here. Let's have a look at the US versus the US JAP, and we have support here at $1.18. It seems to be quite firm support as well, and I think it wants to hold up. So we'll have to wait and see whether we do get an extension higher, and it's going to be purely up to the bond prices and the US dollar index. But it looks like support at $1.18 wants to hold. I'm just looking for some momentum to kick in and some evidence that the market wants to go higher, and for right now we don't have it, not even as we move through some lower time frames. All right, that's the general market update for you today. Good luck out there, and I'll be back again tomorrow. So until then, trade well.